a second. I saw you. There you go, right there. No, right there. All right. So that one is live. You are muted now. Why am I muted? Out of everyone being muted here, why is it me? Main chat. Okay. Alrighty. All right. Wait a minute. No. No. I'm not supposed to be muted. Am I muted? I'm not supposed to be muted. All right, whatever. We'll figure it out.
These are the magical little experiments that make kids put down their phones and
Whoa.
follow the science. Add a little sugar to water, squeeze in some dish soap, stir with chopsticks, dip a straw in the solution. This way you can blow bubbles that won't pop. Poke a small hole in a balloon
Okay.
with tape on it. Not only does the balloon not pop, it shoots out a stationary water column as if frozen. This is the famous laminar flow phenomenon. An egg placed in clear water sinks. Add a little salt to the cup, stir with chopsticks, put the egg in, the egg floats on the water surface.
All right. And do that. That works. This one, live. Come on. Go live. There we go. There and here and there and there
This
and
offends
not
you?
that.
Good. Keep scrolling.
Not now.
But if you love Trump,
Live. Not there. And no, it's no. Bloody hell. All right. Whoops. Wrong way. Do that there and that there. Cool beans. That there. That there. There. Come on. And that there. Alrighty. Live. And live. Oh, bloody roll even. Let's go. Love it. Get rid of that. Bring this way here. Let's do that. Let's do that. Let's do this. Let's do this. And we are ready to roll. Glasses. Yay. Alrighty. Who do we have here today? Oh, the yard bitch is in the house. Jay Hawker. Kevo. Mr. Nice Guy. The Tater Trader. The Tater Trader. That's funny. JTM, James Hart, how you doing? Jim, Tom, what's going on? Yard bitch. Dave, 92, MC, what's going on? Will be here for you. Okay. Edub, what's going on? St. Martin, good evening. E-Dub, what's going on? Chief, what's happening? Baratali, what's going on? Nico, how are you today? Ivan, how are you doing? Glenn, Ben, T4, Tommy, Dennis, Steven, David, James, David. Oh, another David. Ever heard of Finello? No, I have not heard of Finello. Gabby, how are you doing today, Gabby? Luna Kate Fun Life. Luna Kata's Funny Life. Okay, cool beans. James Dupree, thank you for that. Jeff, thank you. Okay, so David, what is Finello? Okay, Chief, Uber has not been around years yet. Salam alaikum, brother. Namaste. Let's start this off. Yay! Alrighty. K-Van, how are you today? They're here, Doctor. Sun, good evening. Good evening. Let's start off. Uber. Dude, I don't know why you want to look at Uber. Uber hasn't been long enough. UBR. Okay. Has not been around enough. But anyway, here it is. You want to take a look? Let's take a gander. Alright, first I always look at, anytime I look at any stock, is the 1 year chart to find out 5 very simple things. Where's the height? Where's the low? Where was it a year ago? Where is it now? And what direction is it going? She dropped down here at the bottom of the year, December, shoots up, finds the high, pulls back, now she's going back up again. Well, let's zoom into that just a little bit more. K-Van, I want my 1%. Hot Wheels, Mike wants to take a look at Merck. Take a look at the last 30 days for Uber. Now, anytime I look at any stock, I always want to look at the last 30 days because the last 30 days gives me a good idea of where do I think it's going next. Well, 30 days ago today, if you didn't know, it is 9:13 p.m., October 27th, 2025. So, if you're new here, this is being recorded, so you'll be able to see everything on YouTube later on. Just find out from there. What do we have over here? Luna, thank you for that. Alina, are you at school? You can say that. Mr. Bubby V, where do I place my money? Now, Mr. Bubby V, you're new here, so just sit, chill, relax. Everything will make sense at the end. By the time we get to the end, I'll be here till 11:15, somewhere in that area. Breakout invites you to co-host. Now, I like the idea, Mr. Breakout. However, I have no idea who you are. Okay? All right, so Mr. Bubbly, just sit tight. I got 9 different platforms that we're doing tonight. So if I don't answer your questions suitable, let me do that. Breakout invite to co-host. All right. Thank you very much. But I'm going to decline because I don't know who you are. And that's it. All right, so let's go back to Uber. It is the 27th. So I want to go back 3 days, which should be right here. Okay, that is the last 30 days for Uber. If you really like Uber. All right, we'll check it out. 30 days ago, we're at 98 bucks. We shoot up to 101, drop all the way down to 91. Now we're going back up again. Okay, we've gone from 91 up to 96. That's $5. Well, $5 on a $90 stock is only about 5%. All right, well, let's keep on keeping on and keep moving forward. Home for the holidays. All right, that works for me. All right, that being said. So, if you like, check this out. Here's the bottom, 30-day bottom. Now she's shooting up. The 96.42s, well, the 96s are going for 180. Well, that's about, is that 3%? No, that's 2%. Well, let's check it out. Now, if you're not familiar, my name is James. This is Dividend Stock Talk. I want to reiterate words. Dividend Stock Talk. So basically, we're talking about dividend stock. So if you have a stock you want to recommend, make sure it has dividends, because that's what we're doing here. Now, what I'm looking for is a simple, safe, predictable, consistent 1% per week. Now, if that's not enough for you, if you want a little bit more, then you're definitely in the wrong place. I'm retired, so every single trade that I do has to be safe, predictable, consistent, and no way for me to lose if I can possibly help it. So that's what I'm trying to do. Just a simple 1% a week. Now, it may not sound like a lot, but 1% every single week does come to over 50% per year. Now, I'm not like anybody else. I do not want to sit in front of my computer all day long. So, the trading strategy you're consitent is the one that I created for my 9-year-old daughter back in 2008. So I don't know if you remember back in 2008. It was a very interesting scenario. Anyway, besides the point. My 9-year-old comes up to me and says, "Daddy, what are you doing? Can you teach me?" Now, that was something I was not quite ready for. Can you teach me? So she wanted to learn, my 9-year-old daughter wanted to learn how to trade stocks. Well, how am I supposed to teach a 9-year-old when most adults don't even understand it? Most adults, you go to any adult, and most of them don't really understand the stock market, or they're not successfully profitable. Now, I'm not talking, too consistently. Okay, so if you go back and you take a look at my history, go ahead, research the hell out of me. Have at it. Have fun. You'll see that I've been online since the 90s. I've been broadcasting or letting out all my trades since 2011. Okay, that was 14 years ago. So I think it was October or August. August 31st, 2011 was my very first post sharing what I've known. Okay, so great. So I'm just sharing what I know. And what I'm doing is I'm creating a video, what do you call it? diary, something like that, for my children and my grandchildren. So if you think I'm doing this for you, no, sorry. You just so happen to be here to see what's going on. Okay, so I'm creating this for children and my grandchildren because at some point I'm going to be gone, and I want them to be able to know exactly what I do. So if I do this every single night, they can at least live restricted for some audiences. Why did live restricted? What did I say? Okay, notice is unclear. I'm still not sure why I got this restriction. There you go. Notice is unclear. Okay, it's restricted for some. Who wouldn't want to know how to make money? I have no idea. Anyway, let's keep on keeping on. As I was saying, my 9-year-old wanted to learn. It had to be simple, safe, predictable, consistent, no way for her to lose. So, that 5 criteria, I came up with 5 very simple rules. Rule number 1, Texas. Thank you for that, brother. How many companies does a person need? Mark, 100% sure I understand that question. You could ask that to, what's... Ooh, well, see, he didn't have a whole company. Tony Robbins had 15. Musk got at least 6 or 7 or 8 of them. How many companies does one? I don't really understand that question. But anyway, we got noise in the background. Noise in the background. Oh, you just muted yourself. Alrighty. All right. Well, that works. Unmute. Oh, I was muted all along. Sorry about that, guys. Didn't mean to. All right, so we got questions in the chat. Who we got? V-Chen. Hey, James, you're on mute. Sorry. Took care of that one. All right, so Uber. I'm going to show you the strategy. Okay, remember I said simple, safe, predictable, consistent, no way to lose. Well, the 5 rules. Number 1, never buy something you don't want to hold long term. I'm not 100% sure about Uber. Me, personally. Number 2, never sell for a loss. It defeats the purpose of the game. And yes, it is a game. Rule number 3, make sure the company is consistently profitable. Rule number 4, weekly options only. And rule number 5, make sure all the numbers work. And we're going to go over each and every individual rule so you'll be able to understand them and it will make sense. Okay? Out of everything you get tonight, one question I want eating on your brain by the night's over. Does it make sense? That's it. Does it make sense? I'm not asking you for pie in the sky, believing in fairy tales and unicorns and rainbows. No. Does this strategy make sense? Buy a good company that's consistently profitable. Buy it at whatever price it is as it's bouncing off of a 30-day bottom or somewhere around there, always in an upward trend. I don't want to buy when it's going down. Okay? Am I buying it? Am I selling it? Is the numbers working in my favor? I want everything to be in my favor because why the hell would I want to do this if it wasn't working? Anyway, so that's the number 1 question. Does it make sense? All right, so Uber, 96.42. The 96 is going for 180. So let's this be the first one of the evening. Yay, Uber! I can't get that excited about Uber. Sorry. Let's get rid of this. Now, I'm going to do what's called a covered call. Now, if you don't know what a covered call is, basically I'm going to buy the stock, and then I'm going to turn around and sell the stock to someone else for basically the exact same price I just paid for it. Let that sink in for a second. I'm going to buy it first thing in the morning for whatever it opens up at. Then I'm going to turn around and sell it for basically the exact same I just paid for it. Now, does that make sense? No, it doesn't make sense. But let me explain why it should make sense. Because if I buy it tomorrow morning, 96.42, okay, it's current price, 96.42. I'm going to sell it to someone else for the same price. Well, let's get 96, which is less than what I paid for it. Now, wrap your head around that one. If I'm buying it for 96.42 and I'm selling it for 96, I'm still walking away with 1% profit. I'm going to see who gets that. I mean, does that make sense? Think about it. I'm buying it for 96.42. I'm selling for 96, and I'm still walking away with a profit. And we're going to look at the chart. It's in an upward trend. Does that make sense? Buy it for 96.42, selling for 96, and still walking away with a profit. So here's the thing. If the stock goes up, great, I get a profit. Stock stays the exact same, doesn't move at all. Doesn't move at all. I'm still walking away with a profit. Now, the stock can go down just a little bit, and I'll still have a profit as long as the stock is above 96 come this Friday. So, a covered call, basically buying the stock, selling the stock, collecting the premium, and then moving on to the next one. I'm looking for 1%. So let's see if this is going to work. Okay, you ready? So, Uber, do I like it? I'm a little iffy on it, but someone else wanted to take a look at it, so I'm going to show it to you. So, here we go. Yay! Alrighty, just one contract. 96, right there. One contract. So you get a good idea what one is going to cost, or one is going to profit you, or one's going to, the numbers. We need to see what the numbers are. Now, if you're not familiar with investing, you put your money on the line at risk. And we get a rate of return. We either sell something for a profit, or we buy something low enough, wait for it to go up, and then sell it. Well, what we're looking for is safe, predictable profits. That's what I'm looking for. I'm 61. I have no desire whatsoever to go for whatever job I qualify for. Good evening. Welcome to Walmart. Would you prefer paper or plastic? Thank you very much. Oh, the eggs are in aisle number 7, down towards the end. As far as ways you can pop. No, it's not for me. Okay, I have no desire whatsoever to go back to work. My very first job was in 1973. Okay, 1973, worked at Old Man Simmons Farm. Was it 1974? It gets a little foggy back then, you know what I mean? I think it was 1974. 1974, my first job, I think. I don't know. But anyway, it's over 50 years ago. So I've been working for over 50 years, and I think I'm entitled to take a step back and say, all right, you young bucks, you take over. That's basically what we do. As we get older, we let the younger crowd take over. They raise their families, they run the country, and we kick back and relax. Okay, so let's figure this one out. All right, so if I'm buying it first thing tomorrow morning, 96.42, I'm going to sell it at 96. So let's see what that trade looks like. And here it is right here. This is the trade right there. Okay, read it slowly to make sure you understand everything that's in there, because it looks like a big old run-on sentence. I know Mrs. Fader's back there watching, my English teacher. She's like, James, that's a run-on sentence. That doesn't make sense. Oh, Mrs. Fader, actually it does. Here we go. You ready? Buy one covered call Uber. Break it down. You know, compartmentalize. One little bit at a time. Buy one covered call Uber. 100, it's just a week. The 31 October 25, that's this coming Friday. That's all that means. The $96 call option against the stock at the market to open. That's just the order. What is it saying? Well, it's saying that I want to buy one covered call of Uber, and then I want to sell it to someone else at 96, which is less than what I just paid for it. That makes no sense. But hear me out. Let's keep on going with the flow. Okay, max profit right there, $140.50. So if I'm buying it, and then I'm turning around and reselling it, I'm collecting what is called the premium. Now, if you don't understand what a premium is, if you are over the age of 18, then you are required to have either renter's insurance, homeowner's insurance, car insurance, health insurance, whatever insurance it is. And that insurance, well, it has a certain coverage. It covers a certain type scenario, whatever you're insuring. Well, with those insurance policies, you have what is called a premium. Monthly premium, annual premium, whatever it is. You have to pay for your insurance. Well, basically, call options and stock options are insurance policies. If you think your stock is going to go down, you buy a put. As the stock drops, the put increases in value, so you don't lose anything. Okay, you think the stock's going to go up? Well, you buy a certain option to make sure you don't lose any money. Well, it didn't take long for people to figure out, well, if I take this life insurance policy, oh, not life insurance, sorry, if I take this insurance policy against this stock position, I can collect a premium, and that premium offsets anything, and I walk away with money. Well, that just makes sense. It's called the covered call. So I'm going to buy it at the market first thing in the morning, 1696.40. I'm going to sell it at 96. I'm going to collect 140. Now that is going to cost me $9,460. Now don't panic. Okay, it's not as if the money just disappears. No, you're actually investing in the corporation. So anytime you buy a stock, you own a part of the company. So if I buy 100 shares of, or I own a small portion of that company, which entitles me to a portion of their profits if they pay out profits. Okay, so there's two different types of companies, only two. There's the dividend companies. Those ones, they take their profits and they give it back to the investors. That's us. That's me and you. We are the investors looking for a portion of the corporation's profits. Well, the other companies, they take all that profit and they put it back into the company for capital growth. So if you're here looking for capital growth stocks or a capital growth opportunity, you're in the wrong place. It's not what I'm looking for. That's not my main focus. My main focus is simple, safe, predictable, consistent, weekly income of at least 1% of whatever my portfolio is. So if I have 50 grand in my portfolio, 1% of that is $500 a week. Well, if I have 100,000, 1% is $1,000 a week, every single week. So if I get 300,000, I want $3,000 every single week. That's 1% of my portfolio every. I say it over and over again. Some people just don't get it. Okay, now 1% every single week is over 50% per year. All right, so if 50% per year sounds interesting, well, great. Maybe this might be helpful to you. But remember one thing, this is not as, set it, forget it type scenario. You actually have to be involved. Okay, so when you get to my age, okay, when you're on this side of the fence and you're retired, you got a couple of things you take into consideration. Where's all the money coming from? What do I mean by where's all the money coming from? Because as a human being, we're the only species on this planet that's got to pay to live here. Believe it or not. And to the degree in which you want your lifestyle, you need more money. It's just plain and simple. Okay, you want to live on the beach? You have to have enough cash flow in order to be able to live on the beach. You want to live in the mountains? Great. You need a cash flow in order to be able to live in the mountain. However you want to live, when you get retired and when you step back and say, you know what, let the younger generation take over, let them do the work. Fine. Okay, but the money's got to come from somewhere. So when you get this age, you get two choices and only two, and I'm terribly sorry if anyone told you you got more than choices. See, I remember we had two choices, chocolate or vanilla. That was it. We were happy as hell when they came out with strawberry. We were. Think about it. And then television. It was ABC, CBS, NBC. That was it. Three choices. Okay, so for those younger group who think choices are everywhere, no, they're not. When you get to my age, 62, and you're going to retire, you get two choices and only two. You do the money yourself. That means you learn and you invest yourself, or you give up accountability and you just give it to someone else to take care of it for you. Now, don't get me wrong; it's a great plan. I actually take care of people, people's money for them because they don't want to be bothered, or they have enough where my tiny little sliver is meaningless, and I'm doing it. It's like, okay, that's nice. Anyway, so the max profit on this particular trade is 142. It's going to cost 94,000. No, sorry, 9,400. Now, just think, I'm going to own a portion of this company for 9,400, and it's going to give me a cash flow on a weekly basis until I decide to sell it. So as soon as you buy shares, whatever they are, if you're going in with the intention of creating, now this is something a little bit different, creating a weekly cash producing asset. TJR, thank you for that. Think about it, a weekly cash producing asset, a gumball machine, a candy machine, a vending machine, a taxi cab. a boat if you're going to rent it out, a house if you're going to rent that out. Whatever you're buying, whatever you're investing in, is it giving you a cash flow? Is it giving you a weekly cash flow, monthly cash flow, annual cash flow? Okay, see, we're here specifically, this my assumption, is to figure out how to create a safe, predictable cash flow. All right, well, great. Uber, here we go. Let's get the calculator, figure out what this rate of return is. Okay, so return, you take the profit, 142, and you divide it by the investment, 94.58, just to give us the rate of return. Kate, that was hard to hear. I'm sorry about that, Kate. All right, so clear this. Profit 142, and we're going to divide that by the investment, 94.58, 94.58, grand total of 1.5%. Now, don't get me wrong, 1.5% is not bad, because if 1% a week is 50% a year, well, 1.5% has got to be at least 75, something like that. So I'm going to save this trade. Now, my son was up here, and he taught me how to save this. Okay, so up in here like this. Bring this one down here like that. Bring this one over there like this. And there we go. Love it. See? That was pretty easy. Hold on. Let's do this. And here's right there. There it is. And this is the one we just did right there. There it is. And as you recall, this was 1.5%. So what we're doing now is we're saving all these trades for the week. These are all the ones that we came up for the week to see if you actually like them or if you agree with them. So Uber, 1.5%. Whoops. Yeah, leave it on red. 1.5%. Cool. Now I'm going to take it and make it, whoops. Make it smaller. Right there. All right. This was last week. Whoops. Okay. Nope. All right. Maybe make that one smaller. Put you back where you belong. Right. Come on. There. All right. Right there we go. All right. All right. This is what we came up with last week. All right. So last week we had Adobe. We had Pfizer. We had Ford. We had Humana, and we had Kohl's. This was last week. Okay. Now Saturday, this right here was something else. So I'm going to erase this. This is not that important. That was a different strategy. We're not teaching that one. Not here anyway. Oh, wow. Oh. Ha-ha! No idea what the hell I just did. Oh, well. Have no idea what I just did. Okay, so anyway, that is Uber. Great, wonderful. I'm going to write Uber down 1.5%. What do we have next? Uber. 1.5. Yes, I write them all down. Not only do I put them on my computer, I write them down because I don't trust the computers. I just don't. It is what it is. Okay, Wenzel, how are you today? Alrighty. All right, questions. Here we go. So next on the list, let's get rid of this one. Get rid of this. Let's put this back to where we were, and let's put this. Here we are. Alrighty, back to where we started again. Okay, Kate, that was hard. I'm not quite sure what that, Kate, but alrighty. All right, let's go back to more questions. All right, so I'm going to read the questions. Now, you got to forgive me just a little bit. We got 9 platforms, but I've only got 6 screens of sets of questions. And these guys over here for X, They never ask any questions. So I broadcast on X, which is Twitter, and nobody ever asks questions on Twitter. I have no idea why. Anyway, what do we have over here? D King, Cesar, how are you doing today? E Dub, all right. St. Martin, how are you today? Jay Hawker, good evening. Callie, Miata, Jeff, Hercules, TikTok, Willie, Kate, good evening there, Miss Willie, and how are you? Miss Kate, sorry. Callie Miata, Kate, got it. Kingdom of My Creation, cool name. Joel Lopez, que pasa, amigo? All right, so Hercules wants to take a look at VFC. Now, Hercules, I do have some VFC. Lovely. Now, every time I look at a chart, it takes me 3 to 4 seconds. I'm looking for 5 things, okay? Before I do anything else, it's this. 5, you ready? High, low, where was it? Where is it? Up, down, sideways, and then up. That's it. It takes 3 to 4 seconds to see that. And if that's okay, then I move over to the numbers right here. So, if I'm buying it, 1661, 1650 is the closest, 108. Oh, hell yeah, that's more than 5%. If I like VFC. And that's always the big question, because the trading strategy is simple. It's just a covered call on a good quality company. Well, the question is, do I like VFC? Well, let's check out the numbers. I'm going to need the glasses for this one. Okay, we're at 1695. The high of the year was at the end of January. It was 29.15. Now, this is something you really got to be okay with. The high of the year, 29.19, 29.15, whatever. And then she drops from 29 all the way down to $9. That's a 60% drop, or a 66% drop. Okay, 29 bucks all the way down to $9. Can you do that without panicking, without selling, without saying, I want to save whatever I have? You could do that. Now, as it's dropping, okay, you could jump out at 20, and once it hits 9, as she comes back up, you can jump back in again if you're okay with that. Well, I don't do it that way. You know, I look at a good quality company. Where is it right now? Right now, it's right here. It doesn't look that good. It kind of looks good, but not really. Let me explain. Okay, here's the high of the year, 29.15. Here's the low of the year. Then she slowly goes up to where we are now, 1661. Fine. Well, let's look at the last 30 days. The last 30 days gives me a good idea of, do I want to jump into this now? No, I don't. Look at it. Okay, 30 days ago we were at 14. She shoots up to 15, drops down to 13, then shoots up 16. Now, you may think from 13 to 16 is not that big a deal. It's $3 on a $13 stock. That's over 20%. From here to here is a 20% increase. And it's at a 30-day high. As much as you might love that, great. No, it's not time for me to jump in. See, I would have jumped in not here at the bottom, because I'm not going to blow smoke. You know, hopefully you know what that means. Okay, I'm going to tell you the truth. Okay, if I find 30-day top, comes down to a 30-day bottom, I want 2 days to the upside, 1, 2, and then I'll jump in on the third day, which would have been right here. Then I would have enjoyed, you know, that drop, then the ups. Okay, so I'm not going to tell you find the bottom. No, that's a bunch of horse. Well, you know what I mean. It's a bunch of crap. Okay, here's the top, comes down. That's just a bottom. That's all that is. And no, I'm not very good at picking bottoms. So when a bottom shows up, I want 2 days to the upside, 1, 2, and then on the third day, I will jump in right there. So I missed out on this to this. And I'm okay with that, because that's not what I'm looking for. What I'm looking for is a good company that's consistently profitable. That's this one. And it's the bottom here, 2 days up, and then on the third day, I'll jump in, and I will take this right here into like my 1%. Get my 1%, I jump out, and then I jump into something else. because every single company is doing the exact same thing. They're going to work, they're clocking in that little time clock, and they're putting in their 30, 40, 50, 60 hours a week. They're contributing to society. Oh, great. Well, they're all got the same thing in mind, to do a good job, have a good service, and to be productive and profitable. Well, if they're all headed the same direction, I just want to, jump on for 1% for this company, and then when this gets a little too high, like where it is now, I'll jump off of this one and then jump into something else. But I'm always working every single week, week after week after week. I jump in on a Monday. I like to be out on a Friday. And then the following Monday, I'll jump back in and something else. There's over 10,300. You know what? We haven't looked yet. So let's look right now. We haven't looked this week yet. So let's see how many stocks are. Okay, for that, we go exactly. Finviz. Finviz. If you don't know any financial visualization company, okay, they just give